These are very little amounts of seed capital to these small traders. These people whose turnovers are not so big. In fact, they have a revolving seed capital. They buy goods in the morning, they trade off. Tomorrow they go back and buy, restock again. The partnership and the relationship we build with our client, they are not willing to default intentionally. That's why we have our loan book performing at about 97%. In the market, we are the most fairest. We charge about 12%. Most institutional charges way above that. My name is Wycklife Ochola. I'm the Chief Executive Officer of OYA MicroCredit Company, Kenya. So OYA basically is part of the larger Congo conglomerate group. We operate in Africa. We have presence in 7 African countries. This company, we are in lending space. We're doing unsecured facilities to small and medium enterprises. The company was founded in Accra, Ghana, where the mother company is, and now it has spread across various countries in Africa. In the eastern part, we have presence in Kenya, Tanzania, and Uganda. And the western part, we have apart from Ghana, we have presence in Liberia, Sierra Leone, and Nigeria. So we are basically a micro lender where we support the small enterprises, the small businesses. We give them. These are people who are not able to get these facilities from the mainstream banks. So we provide alternative lending solution to them. Basically, that's what we do as a company. Now in the country, we have 110 branches, counting to date. We launched 10 branches just early this week in the larger eastern. In Kenya, we've been able to cover most parts of the country. In Nairobi, we have 40 branches covering the larger Nairobi metropolitan. In Western, we've covered the entire Western region. We've covered the entire Mombasa, all from North and South Coast. We have about 20 branches in the coastal region. In North Rift, that is Eldoret regions all the way to Kitale. From Kapsabet and Nandi, we have branches those sides. Kisumu, we have branches in the larger Nyanza, actually. That is the 4 counties: Migori County, Siaya County, Kisumu County. And now our next stop is Central Mount Kenya, where I'm going to launch about 20 more branches in the next 1 month. So before end of this first half of 2026, we should be having about 130 branches. So we are largely, national outlook as of now. Okay, so a microloan, you see the large term SMEs, there's a M which is very micro. So micro, these are very little amounts of seed capital to these small traders. These people whose turnovers are not so big. For instance, maybe in a natural labor languages like Mama Mboga, somebody who has a very tiny barber shop, or someone who has a kiosk there, small grocery kiosks, those who sell for some burgers. So those are the categories of micros. Like their turnover is not so much. So if we can be able to, like for us, we've categorized micro to start as low as 5,000. See, 5,000 10,000, 15,000 facilities. Those are the facilities we advance to them. These are people who are still young in business. Their business has not grown, but at least they can be able to get these small facilities as micro bit part of it to help boost them. As you know, small, medium enterprise. Medium enterprise are people who make very big turnovers. Medium ones also make very big turnovers, but there's a bigger segment of micro businesses which still the turnover is not so big. In fact, they have a revolving seed capital. They buy goods in the morning, they trade off. Tomorrow they go back and buy, restock again. See, they have revolving seed capital. So that's the category of micros. So we give them, we have them covered within our facility. Yeah. In the country right now, very few businesses or very few business women and men, they can afford a collateral to walk into a bank and get a facility. So here, we give them the alternative solution. We don't want to burden them with collaterals, like bring your title deed, bring your logbook. They don't even have a car. They don't even maybe have even a motorbike. Why will they get a logbook to come and so that's the space we are in. We don't want anything in terms of collaterals. What we build is partnership. You are a business person. We give you money, we partner with you, we train you, we nurture you, then we grow with you. So what we're having is a mutual, kind of partnership. You don't have this, but with us we can provide you this. So it's a risky space, but it's really helping the larger community, because very few individuals, maybe you and I, can afford a car, can have a logbook for a bigger facility, but many business people, they're really struggling. So that's why we've decided to venture to that. Look, this is a business person who knows that all their doors have been closed. So I'm providing a solution. These clients, they will not want to spoil our relationship, because they know if they spoil it, they will not get it anywhere else. Even in this space of microfinance, other institutions are charging deposits. You have to pay, you have to open. You need money. Why should I come and ask you money? But you are looking for money. So we've built that relationship. These are people who they cannot try and spoil the relationship. But it's not that everyone is clean. There are people who have ill intentions. They won't pay. It's okay. But I can assure you, that's why we've been having a very good loan book performing at 96.5, 97%. So the 3% default rate is a mix-up of these business people who have ill motive, and maybe some are very serious unforeseen cases of issues like conditions, the political instability sometimes, and the natural calamities. So the 3% is allowed for our space, but I can assure you the partnership and the relationship we've built with our client, they are not willing to default intentionally. That's why we have our loan book performing at about 97% from inception to date. We have a loan consistently. Actually, our loans, we are able to collect over 90% when they fall due, over 90 by noon of the due date. Then the 7% could be a bit of late repayment, but late repayment in terms of maybe if you are to pay by noon, then we'll delay you pay at night or the following day. So when we run our portfolio, maybe at the end of the month, average is 3.5 default rate from when we started to date. People, they measure their portfolio on what is on that. With us, we measure our portfolio outstanding beginning to date. We don't write off loans. Yes. So the partnership we build, and look, we disburse to numbers, because we disburse over 16,000 loans in a month. So clients, we have a very high client retention. So once we build partnership, clients, they know how we work, they know the policies. Then the interest rate that we charge is also quite fair. Actually, in the market, we are the most fairest. We charge about 12%. Most institutional charges way above that. See, with the risky environment we are in, because we do unsecured, no collaterals, no CIB check. We don't ask for any statements, bank statements and M-Pesa statements. Look, what we want is you are a business person. We assess your business. There we are able to gauge how much we can advance you to start you off from that. Another thing is the graduation policy that we have. We have a graduation policy of up to 50%. So we give you a facility with a loan tenure of 3 months. You clear it off, the subsequent loan, we give you up to 50% more. So it happens that the business really grows in our eyes. We see it grow. The clients, they love it. Some, they even pay their loans before the loan period ends. Like, we charge real-time interest, 1 month, 2 months. If you pay your loan within 1 month, we only charge you interest for 1 month.
So
it becomes less. We waive off there and earn interest. So you see, this is what now builds our relationship with the clients. They come back for more. Then they grow. They are not stagnating. I can assure you, somebody who was taking a loan, like currently we have 12 track by, people who have taken a loan 12 times since we started. A loan period is 3 months. So this person maybe started off with a loan of 50,000. In 1 year, this person will qualify for a loan of about 200,000. No institution can be able to guarantee you that. But with us, we guarantee you. A Mama Mboga who was taking just 10,000 within 1 year with us will be able to qualify for about 50,000 loan facility with us. We've seen them opening more branches from our support. Recently, I launched another product called Promo Loan. Promo Loan is trying to elevate even more people who are very serious with their businesses. If you've never defaulted any loan with us, and you are taking a facility of, let's say, 200,000, I'll now give you a reduced interest rate at 10% from 12. Then I give you 100% over and above. So these clients, they're able to qualify for like 20% of their normal, loan facility. And we've seen 30% of our loan book qualified for this facility. So these are people who have never defaulted, not even a single installment. We give you 100% more. If you had a plans to expand your business, you'll expand and you'll continue repaying your facilities smoothly, seamlessly. We are not per se a digital lender. Why? I only have one operation office, but the other branches, they are branchless kind of model of operations. We don't have physical branches. So the branches here, we have presence. So what we do is we set up a branch, for instance, in Kasarani. We don't put an office there. We put in a car or maybe a motorbike to some regions. So that's the office. Because we come to the client, to your doorstep. So we have physical employees present in every branch. They come physically to your business. We have one-on-one discussion with you about your business, how your business has been. So that's what we call business assessment.
So that's the model.
That's the model.
You're actually not setting up a physical office.
We don't do offices. Because which client will leave the market and come to the office for our facility? We bring it to your doorstep. You see? Because once we've onboarded the client through a call to our 24 hours, 24/7 dedicated call center, where we create a virtual account, then the physical employees, the loan officers, they are present across all the branches, a minimum of 2 or 3 staffs per branch. So they come and visit you. They take you through the terms and conditions, which already during the docket creation, all of them will have been told. But now one-on-one interaction. Actually, most of our loan officers, they are termed as mwalimu, like their teachers. They try to bring this financial literacy to the business people. You see, so we have one-on-one discussion, the journey, how's your business, what are your turnovers. We look at the turnovers now on the sales records. From that, we are able to gauge the amount that we can advance. And then after that, loan officers have done their business appraisals. Of course, there are KYC that we do with the client physically, including the IT, the business permits. I mean, you have to be legally a business, operating legally a business for us to be able to advance a facility. Of course, we give loans to businesses which have operated not less than 6 months. You see, these clients, maybe we also extend by doing a home visit. I mean, why? We are not going to your home to see how largely you are living on, or just to know, at least in the event your business is closed, we might maybe have a trace from your home. We see, because you never know, you might fall ill, etc. So we build relationship. It's very deep. That's why we've been able to penetrate the market so easily. At large, there are several microfinance, several, and clients are multi-funded. But research, before we even set our branch, we do a lot of market study and research and everything. So it's a potential region for us. We've pre-marked the country, so we've been launching with priorities and kind of demand. So there's good demand that we're getting from Central, though Eastern had a higher demand and it looked untapped. However, now the existing business there, we are going to go in and penetrate the market. I can assure you, we're going to give them the best solution from whatever is existing. The market could be flooded with strange, models, but now our model is going to compete competitively with the existing ones because we provide very good affordable rates. We give a very good model in terms of customer care, customer acquisition. We are competitively advantaged in terms of how we operate. The loan cycle, the procedure, the way it seems. I mean, we have a lot of competitive advantage, and we're going to hit the ground. June, by end of June, I should have launched about 20 branches in the Mount Kenya. Yes, actually, we are only left with 2 regions, Mount Kenya and Central Rift. Then we'll have covered the entire nation. Yes. Many business people, they need a continuous training and guidance in terms of how they can handle their finances, how they can be able to continuously run their businesses, and that's a niche that we have. We have it covered because we walk a journey with them. Even we go to an extent that analyze how these people, they keep their records. If they don't keep records, we advise them how best they can be able to keep their records. When they find an institution which can be able to blend in and provide them with alternative knowledge to what they're doing, it really helps them. What we've done, again, we've developed an AI system which is able to chat clients. We have a bot. We engage our clients through WhatsApp chat. You see, random questions like, Steve, how is your business today? Which advice would you like from us today? You see, we have a live chat bot which engages clients randomly. You see, so they ask, and then it's customized in a way that it gives them solutions, answers. It's a question answer based thing. They ask any question, we give them, because we've mapped out the possible concerns that they have. So you see, that's one. I think again, physical interaction with our staffs, with our call center, with our portfolio department, we engage clients. And so what's the challenges are you getting? How do you do this? So you see, they've been able to really appreciate. Aside from us giving them credit, we also give add value. to what they do. That's why they've been able to really like us and walk a journey with us. Yes, so the journey has been so tremendous. Of course, ups and downs, but I can assure you that the clients are so happy. I like the journey we've walked with them. We've been launching a branch after another, which comes with core demand. I mean, there's been a lot of demand. What attracts our expansion is the demand that comes in. So you get an overwhelming feedback because we don't just trash the market. Like, I mean, we go as planned. After we are done with this branch, we ensure that they are all satisfied. At least they are able to meet the optimum point. Then we go to another branch. We don't just rush because we have to ensure that this branch is good. They're well covered. The clients there are happy. We set it up well. It runs before we go to there. The issue is not about covering the market. The issue is about satisfaction to our clients. I mean, before we go to the next. So that's why we do these quarterly kind of expansion plans. And so after we ensure that, because our loan cycle is 3 months, within 3 months, like in quarter, like in this second quarter, we were supposed to do 30 branches quarterly. Then the next quarter we also do like that. So within a quarter we are able to fully, set up the branch and ensure that the clients understand our model, so that we don't have a lot of hiccups with collection issues. In fact, you'll realize that when we go to a region, we don't even launch so many branches at a go. We only start with a few, then the rest rolls down simultaneously. We ensure that the clients are satisfied, because the first batch of the loans, the interaction, the process, everything sends a very good feedback. Is when now we're able to roll down the rest. Otherwise, it will be of no use. We launch a branch and there are complaints every now and then. We are not able to meet the client's expectations. So that's what has been really motivating us to grow. Then, this model is runs on population and on economic activities. You see, we just don't put a branch because Nakuru is busy to put our branch. Like Nakuru, we only have Nakuru as a town. We'll have like only 4 branches. Nakuru as a town, because we base it on population and economic activities. We also don't want. Otherwise, other people put only 1 branch in Nakuru, then they're done. But with us, in Nakuru, we mapped it out. We have like 4 branches within the CBD of Nakuru, and it because the demand will be very crazy. 1 branch will not be able to satisfy the needs. So at least we mapped it out in a way that at least 4 branches will be very sufficient, because we want approval to be like instant. In less than 48 hours, you should have your approval. Then we know how to do the weekly disbursements. Yes, we don't want any loan unapproved. So if we don't give you a facility, you don't qualify outrightly. And what are the things that makes you not qualify? Your business has not run for 6 months. Maybe you're not a Kenya national. Those basic things. Or maybe you don't have an ID or an abstract. So, every inquiry that comes into our space, we ensure that we give a solution. Even those businesses which are less than 6 months, we just give them time. Look, we keep an archive of them. Look, we tell them, call us in the next 6 months, in the next 4 months, 2 months, you will have qualifier. Then you realize they'll call us back. Then we give them facilities. Yes. But we also have another product which will roll down soon. We call startup loans. Startup loans, we won't give it to somebody who's just ambitious to start off. No. We'll give it to somebody, maybe your business collapsed, but we can pick you up again with some small startups. You see, maybe you had done some business sometimes, but then out of unknown issues or maybe unforeseen, you collapsed. We are able to, furnish you with some capital. We call it startups. I told you about the USC loans, which is kind of emergency loans. I have a facility maybe running at 300,000. Our system will be able to rate your account for how much you can qualify for as instant emergency loan. Just dial USSD and then you get your funds. Then you'll just be running. So those are the things we're trying to tailor make to enhance what we have already. we'll go to credit card, but we want to do a bank. Yes, so in the long run, we'll do a credit card. It's a discussion that we have at a board level. So that's why we're going to start off with the USSD loans to our existing clients, and then after that we'll try and pull it up to credit card. See, in this market, very few institutions does that, but that's what we are looking to. Yes, but now it will be for the general public. I mean, as long as you have some source of income, you'll be able to qualify for a credit card from us. That's our long term. But we don't want to be a bank, because we are providing a solution alternative to the mainstream. We cannot copy paste them. They reject, we take the rejected. We are there for them. Yep. A lot. Then now they can even be bankable now. The banks reject them. They are not bankable. But in the long run, these people are empowered through our facilities. They now become bankable. But it's a good group. I like it because the maximum loan we can give is now 600,000. But maybe a client will have grown beyond what we can offer. Then now we've nurtured them. They can now go for bigger loans from the bank. They'll now have title deeds. They now have logbooks. So bank can now take advantage of them. But they will still be continuing with them because they will not forget us. That's the journey we like. But we're looking forward to credit card. Hopefully, it's a discussion we have at the board. At a later stage, we'll have it. Now, interestingly, we are risk takers in the space. Look, even during Mandamanos, now we've seen this chaotic, the city can be very chaotic sometimes. Our clients are very cautious. We also know. We'll just tell them, we advise them. Some will even call us to seek for advice. We'll call them, just close your business, ensure that you are not interrupted. Once it comes down, open up the business. So, we also help monitor the situations and we engage. Now, we will not stop lending. And that is the time we will give these people money. Because most of the companies will have shied off from lending. With us, that's the opportunity we will take and support these business people. Those who will be willing to work with us. Most companies will stop lending when the electionary period starts. We've seen it happen. Even during COVID, this company was launched during COVID in Tanzania. We were operating in Tanzania during COVID when most companies were shutting down and stopping to lend. You see, it doesn't mean that during elections people will not be eating, so hotels should be closed. It doesn't mean that that's the time everyone needs money to pump into their businesses. So those clients who will be risk takers to operate with their lives, with their businesses, we will be there to work with them. Even those clients who will even try to scale down, we will tell them, why should you fear? What will you eat after elections? We give them the confidence that they need. Not unless they will be at a very risky situation which they will have to close down. But you see, we also know our loans are 3 months loans. So we also know, and they also communicate that, I'm planning to relocate. Even if they relocate, they go to a region where we have operations. We will not shy off from not funding this client because we know the capacity and the potential the client has. If a client is in Nairobi, this client wants to relocate to Mombasa, maybe for X years or I don't know, which I think should not happen next year. We will be able to, if they will set up their business wherever place they will go to, we'll still continue with them. But I can assure the citizens that those who are doing business, we will be there for them. We will keep on funding them for their businesses as they will need. In the event there are eventualities in the one-on-one discussion, we'll have discussion. Then of course we have a repayment plan, reschedules and all those. So those are now internal, and they understand and they know. We've had cases like Jamhuri market. Sometimes was it Jamhuri? It burned down. Kibra, there were some fires. There was some demolitions. Of course, some of our clients have been affected, but we just sit down and restructure. We agree, and then they're able to continue their lives. Of course, those are the part of the model. The eventualities that are not certain, we come through for them. Yeah, so well, of course, my journey started from somewhere, a junior position to now where I am. I've been in the lending industry for I think over 10 years now, in different capacities. Started as junior. I mean, I grew until where I am. I'm the founding CEO for this company from 2021, about 5 years ago. What I've seen, because I've served clients in my low positions, I'm now serving clients in this position. There's just need for capital in this country. People borrow for personal emergencies. People borrow largely for the businesses. The businesses that business people are running in the country are capital intensive. People borrow for very few people borrow for lifestyle pleasures, because loan is an obligation. The few who have tried to borrow, maybe genuinely with the business or everything, then they divert this to pleasure. They go down, their business collapse, because they borrow more money unintendedly, purpose. But what drives the interest is the stock, or maybe expansion plans. I've also seen a trend, people borrow to offset other obligations. Now that's a recurrent obligation. You're solving one, then you're adding yourself another one, because you'll have to borrow more so that you clear off the other one. So the if you look at it in the dynamic way, the trend whereby people borrow to offset, it's not sustainable. I've seen them go down, the business even collapse, because the business will not even survive. But people borrow genuinely to buy stock, for growth. Maybe they have trade needs. I mean, they really happen to grow very fast. And what can only shake them is unforeseen circumstances, natural calamities, etc. You see, but because I've worked in different capacities, even different companies, on a different lending model, like even I've done a security facility with other institutions, whereby really somebody has a title deed or has a logbook and needs capital for the business. So you see, what they do is, because they were not able to get any lending solution from any other, they will, give out a logbook to be charged so that they can get facility. But you'll realize that the interest rate is so big, they're not even able to get a lot of money. You see, because if you look at even the motor vehicles on the road, very few are of high class. Majority are of just medium, so they cannot even fit a lot of amount. You see, but the SMEs in the country, which standing at about 78%, these people, they really need a lot of tailor-made solutions in terms of financing, and they need guidance, they need financial literacy. We need to walk a journey with them. That's what will even make the economy grow. You see, any institution just lends because they want to see their numbers in terms of loan book. I mean, it's not good. So you walk a journey, you create an impact to our clients, because it contributes largely to the larger economy, because that is what runs this country. 70%, 80%, a big population. Yeah. So it's a good space, and most of these people, they're also not bankable. Like, you see, CIB, I don't check CIB, but a rating is a rating. Let me give you a story. For instance, you could be negatively rated or positively rated. Obligation is intent in terms of a wish. As someone can deliberately fail to pay you, you'll go and list about, okay, fine, because of customer care, maybe this client was pissed off with something. Rating does not define you, does not define your capacity. You know, CIB could rate you for even 300 shillings, but that doesn't mean that you are incapacitated. Maybe you qualify for even a 1 million loan. In fact, I like what Safaricom did by trying to limit the SIM cards to 5. That was a very good move. Even me, I realized some years back I was listed because of 325 shillings. A loan which I did not even take. I don't know, somebody took my ID and went and registered the same car. You see, so rating, as per me, does not define capacity of a business person. You see, that's why we don't check it. If your CLB is as clean as shit, it's okay, but you'll realize that they're still defaulting. You see, as a business person, it's okay to default 1 or 2. It's okay, but you should not drastically be listed again. You remember? But because of the need for the finances, business people, the moment they're able to get solutions, financial solutions, and literacy, they won't default. They will stick by you. Okay, so you train me, you teach me, you keep on giving you higher limits so that you don't go and borrow somewhere else. We grow with them. That's what has really enabled us to cover this market. We give you this, you pay within a month, we give you 50% more. I mean, even if you want more, you'll still be able to get it with us, from us, as we progress along. So that's what we're trying to change in this space, so that I don't take facility and then you'll be. We've seen clients who have borrowed like 4 times, multi-funded by 4 institutions. When we go to collect, they pay ours. In fact, they call our staffs aside, let me pay yours. These ones, they'll wait. Let them wait. But I cannot default OYA loan. You guys are so good for us. In fact, I'll be done with these other ones, then I won't take again from them. They will focus on us. So that's very, very positive testimonials. I mean, and we like it. You see, it's about engagement. It's a partnership. With us, we don't just call ourselves we are lending. We are partners. You have our money, we are now partners. So partners, you have to grow forever until the partnership ends. Even if you want to go, you'll tell her, me, I want to relax for now. It's okay. When I need you, just come back. We don't even start you afresh. We start you from where you left, unless your business collapsed. But now, remember, we're also coming with another product, startup loans. If you collapse, we will come back for you. Why do they collapse? Because they were multi-funded. Then this auctioneers, recoveries, every company tries to take your trade stocks, take your everything. You will definitely go down. With us, we don't even take collaterals. Why should we take your collateral? We don't have, companies have warehouses, they keep collaterals, the household goods. Why? With us, we don't take all those. We just talk to you, we engage you, we train you. We also don't overfinance. We give you what your capacity can meet. You see, so that's why we have a portfolio of over 100,000 active clients, because they know us, they believe in us. Yes, along the way we'll have to have issues if you are trying to default, because we are also in business. But the clients who understands and takes into action our advices, they don't default. There are people who have become even so bad, troublesome. We take them to the line. Look, you have our loan. So if you don't want us to walk the journey, you just pay us off. We leave you in peace. So we also have to be very hard on those who are trying to default. So that partnership and strictness that we run our model with, they take us serious. In the process, and they understand that OYA, they are good. If you try and play games with us, we'll just recall back our loan, because we'll say, you are not a good partner. You go try other companies. We'll blacklist them. They will try come back again. We tell them, will you behave the same round? We'll try you one more time. See, so we run a very, very unique model in the market, and this has really made us. We are proud of where we have reached, and I think we are going to really give Kenyans the best solution in this space, because most institutions who are doing this micro lending, they have closed down. Some of them are closing down because some people are just there to make money. But remember, the intent is not to satisfy yourself. The intent is also to satisfy your client, because after client is satisfied is when you can be satisfied. You make money in lending after your loan has been repaid. So why would you spoil your relationship with somebody who owes you? You'll close, you'll shut down. With us, we value the client so much. Two things I value: my clients and my staff. Those are the only two things we value in this company, because it plays a very pivotal role. Because my staffs, they enhance this relationship with our clients, because it's the tie between the company and the client. My staffs, so because the values that we pass down, they have to also pass. Because I'm only one, I'm a CEO, I might not be able to interact with all the employees, but now the values, they trickle down through them too. That's why we are even having a very big party tomorrow, just to say thank you to our employees. I wish I could have a space where I can invite all my clients and we party together. But now, because there are many that are scattered, we will send them messages of thank you. Yes. Yeah. So the journey has been good, and we really appreciate the support also from the government itself, the policies, the CBK, the security apparatus, and our clients at large. We are still there to support them. And look, this is just 4 years. The company, we call it so baby now, but now the company is fully fledged. Now we are going to see us big in the market, and we are going to shape up the lending industry in this country. I mean, as long as you are getting an income, as low as 10,000, it should be formal. I mean, this also contributes to even them to KRA, because once these things are formalized, they will start getting some extra pay, etc. So we are really going to contribute largely to this economy through supporting the business people. And we also hope we'll work a journey together. The government will continue supporting us. The regulations comes day in, day out. We are law and abiding businesses. We remit all our dues accordingly. Yeah, and again, the impact on the youth, because we employ youths, young ones, from the community. Me, I don't take staff from Nairobi, I take them somewhere. I come to Wajir, I employ youths from Wajir who works for us. We train them. Some of them, we bring them to Nairobi for even advanced training. They see how we operate in Nairobi, and then they go back, they're well skilled. I mean, we also support the communities. We are also coming up with a foundation. OYA Foundation will be in running, up and running by then. Actually, in the next 1 year also, we should have OYA Foundation, where we will be supporting the needy, the less needy, and the less fortunate, and the needy. We'll also have a food bank. I mean, those are the plans we have. We'll be feeding the less fortunate every day. So those are some of the things that we'll plan to do. But by the 10th year, all the products that we have, we'll have rolled them down.